Hey everyone, welcome back to Corporate Decoder. Today we are diving into a company report that's a bit like a choose your own adventure but with more numbers and fewer dragons. We are going to unravel the story of Omnitek engineering, but is it a tale of innovation or just another chapter in the book of corporate what ifs? Here's the hook. Omnitek is trying to make old diesel engines run on cleaner fuels like natural gas. Sounds good, right? But their latest financial report suggests they might need a fuel injection of their own just to keep going. First off, this is their annual report, a Form 10K, basically the company's yearly homework assignment for the SEC. It covers everything from what they sell to the risks they face. This report card is for the year ending December 31, 2024, so we're getting a look at their performance over the last year. Omnitek Engineering Corporation, based in California, they are in the business of taking old, dirty diesel engines and giving them a new, cleaner life with alternative fuels like natural gas, liquid natural gas, or even hydrogen. Think of it as giving old cars a green makeover. Their main product is a kit to convert diesel engines. Instead of buying a brand new expensive alternative fuel engine, you can just swap out parts and use a different fuel. They also sell new, complete natural gas engines. They have got approvals for some engine models from the EPA and Corp, which are US regulatory agencies, as well as European Union certification for one of their natural gas engines. Think of these approvals like getting a car to pass a smog test. Since 2001, they have converted over 5,000 engines worldwide. They are looking for partners to sell their products around the world. This is key because they are up against bigger companies. They compete based on how good their product is, how well it works, how reliable it is, and how much it costs. They don't see many direct competitors offering complete systems to convert heavy-duty diesel engines right now, but others could come along. They rely on a few suppliers for their parts. This is risky, because if those suppliers have problems, so does Omnitek. They also rely on a few big customers, so losing one could hurt them. Now, a quick word about those forward-looking statements, which always feel like a disclaimer at an amusement park. It's where they warn you that the future is uncertain. They own patents and trademarks to protect their technology, which is important. Being a public company means they have to file reports with the SEC, which costs money, about $55,000 a year just to keep up with the paperwork. They spent about $70,000 on research and development in 2024, a slight increase from the previous year. This is how they try to stay ahead. They are a small company with only 6 full-time employees. The war in Ukraine, conflicts in the Middle East, and other global issues could mess with their supply chain and increase costs. An economic downturn could mean fewer customers and slower payments. If natural gas prices go up, fewer people might want to switch from diesel. A slump in the trucking industry would be bad news for them. Emission standards are changing all the time, which could make their products unnecessary or late to the market. If they grow too fast, they might not be able to handle it. New products, while necessary, always bring about risks. Their stock price could be up and down like a roller coaster, and it might go down more than up. Someone could claim they are stealing their ideas, which leads to costs. The big one, they haven't made much money yet and might not make enough to keep going. If their suppliers can't deliver, they are in trouble. Cyber attacks are a risk to their business like everyone else these days. They are renting their space in California. They are involved in a legal dispute which could cost them money. Let's talk stocks. Their stock trades over the counter and the price has been bouncing around between 1 and 5 cents. Their public float market value, the amount of shares the public own, was around $265,000. They have about 21.9 million shares of common stock out there. Time for the meat of the report, the financials. This section is management's take on how the company is doing. Revenue, they made about $1 million in 2024, a slight drop from the year before. Basically, sales stayed about the same. Costs, their cost of goods sold went down, which is good. Gross margin, their gross margin, which is revenue minus the cost of making the stuff, went up. That's a positive sign. Operating expenses stayed roughly the same. Net loss, they still lost money, about $167,000, but it's less than the previous year. Cash flow, they did have some positive cash flow from their operations, which is a small win. However, the company had negative working capital, meaning their short-term debts were higher than their short-term assets. Nothing hidden off the books, that's good. They're keeping up with accounting rule changes, but nothing major is expected to be impacted. Here's what the audit thinks. Their auditors are raising concerns about whether they can stay in business. Not great. They are having trouble with how slow their obsolete inventory is moving. After reviewing everything, what's the story here? Omnitek has a potentially valuable technology, but they are struggling to turn it into a profitable business. The good, they are managing to decrease costs and losses. The not so good, they're still losing money, relying on a few customers and suppliers and facing major risks. Looking back at this report, it is obvious that things are not looking great for them. But perhaps the biggest flag is their internal controls. They have a material weakness. And in conclusion, Omnitek is at a crossroads. They need to scale up, find new customers, manage their risks, and improve their finances, or their green dreams might just run out of gas. Thanks for watching. If you found this breakdown useful, give us a like, drop a comment, and definitely subscribe for more deep dives into the world of corporate filings.